U.S. nat gas prices edged closer to the $2.84 level, recovering from a recent dip to $2.70. This uptick occurred as markets assessed signs of reduced supply against a backdrop of muted demand. Recent data from the EIA revealed a 33 BCF increase in natural gas stocks in the United States, falling short of the expected 43 BCF build and well below the second quarter averages. Nevertheless, the anticipation of reduced demand curbed the price increase. The shift to cooler seasonal weather tempered expectations for air conditioning usage and gas consumption in the short term, although meteorologists still predict temperatures to remain mostly above normal until mid-September. National demand will drop to low levels by mid-week, as highs in the upper 60s to 80s cover most of the U.S., with the exception of the far southern U.S., where temperatures will range from the 90s to 100s. This includes stifling heat over Texas the past 2 months, finally breaking as highs drop from mid-90s and mid-100s to 80s to 90s. European nat gas futures rose more than 6% to above €36 per megawatt-hour on Monday, extending gains for the third session due to supply disruptions. Norway's Troll facility is entering its third week of undergoing maintenance, and it will have more capacity restrictions than initially thought. In Australia, there have been partial strikes at 2 Chevron facilities that started last week and are still ongoing. Additionally, however, the potential impact of the strikes is likely the only bullish element in the near-term market, given we have now entered the pre-winter shoulder season, and other indicators are bearish in both Europe and Asia. In the near term, the market sentiment is inclined towards a bearish outlook. Abundant natural gas reserves in storage and a lack of compelling catalysts for substantial price increases have investors proceeding cautiously. Although European concerns could introduce an element of unpredictability, the prevailing sentiment indicates a higher potential for downside risk, especially in the U.S. market. From a daily technical viewpoint, the price is currently below the main resistance at $2.85, but above the main support at $2.75. A failure to hold $2.80 will restrain some of the upside momentum, but the uptrend will remain intact unless pivot at the $2.75 fails as support. Regardless, short-term dips should continue to be a buying opportunity, and I do think that eventually, cold weather will drive this market higher. Please don't forget to hit the like button if you enjoyed the video. See you in the next one.